Joe Barato, the Arrow Shares Global Yield ETF has had a fairly nice summer in terms of performance. What's driving it?
I think what's driving it is there's demand in the marketplace for yield. We've got some securities like master limited partnerships, sovereign debt and corporate debt that are driving the performance, and investors have been really running to that because of the high yield that's coming from those type of instruments.
And how does the ETF break down the securities in it? What are the different asset classes in there, and how do you weight them?
It's a good question. We have 5 distinct buckets. We have global equities, global real estate. We have what we call alternative energy, so master limited partnerships, Canadian royalty trusts. There's sovereign debt and corporate debt. Each of those buckets are equally weighted, so you have 5 baskets, and within each of those baskets there's 30 securities. So very narrow exposure that focuses on a high yield in each of those buckets.
And why is an ETF a better way to gain access to these asset classes as opposed to a regular old mutual fund?
Well, there are not that many mutual funds out there today that offer this global exposure with these 5 buckets all wrapped in one. So I can say that it is truly a very unique strategy. And ideally, people want ETFs because they want the liquidity, they want to see the transparency of the underlying bucket, and that's ultimately one of the benefits that you have there. The other side is that the fees are a lot lower on the ETF.
This market has fewer players.
We're coming into a Monday where we're going
We're entering a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings.